Let's start with the incredible selling then across the Korean market, but not limited to that. The Japanese market is also down. Weakness in tech stocks in Asia once again. And what are we learning through these incredible days of volatility then, Ven?
Absolutely. Morning, Anna. I think that the US markets, regardless of what's happening in Asia, I think that the US markets will soon decouple from the brutal meltdown that we have seen in South Korea. In fact, if you look at the VIX index and the VIX one-day index, Anna, traders are hardly factoring in a major volatility event. You won't believe it, but the FTSE 100 has actually rallied the most in a month this week, despite all the wobbles we have had, incredible as it sounds. Calling it a Korean stock market problem is almost a misnomer, given that it's mainly about two stocks, Samsung and ASK Hynix, and the immense leverage stories surrounding those single stock ETFs. My sense is that Korea's stock market problems will continue to drag out for long, but US stocks will pull away from those very idiosyncratic issues. That's not to say that there isn't a frenzy in AI-led names and memory makers, but investors should be really wary of the intense musical chairs being played here, with smart money rotating in and out of assets at a frightening pace. So much so that these are some of the most treacherous markets that even professional investors have seen in a long, long time. So this is a market one should be extremely wary of getting into if you're late to the party, really.
Intense musical chairs. I like that, Ven Ram. It certainly feels like that, doesn't it? And this week has really kind of shone a spotlight on those moves. Meanwhile, gold is hovering, and it had crossed below this level earlier this week, below 4,000. Right now, it's just above 4,000 per troy ounce. What are the dynamics that have been moving gold in recent days? How are you thinking about the yellow metal? It's the same intense rotational play that we've been talking about, Tom. Smart money has fled gold and Bitcoin, the previous frenzied assets. If you remember and go back to late 2025 and early 2026, those were frenzied assets and they were running up like 30-40% in no space of time at all. And that same fast money, in search of faster returns, has gone to AI names and memory makers. It's the same vicious rotational play. Gold has slumped 30% from its peak that we saw just in January, and that feels like a long time off now. Bitcoin has shed half its value. What that shows is that investors should be wary of chasing convenient narratives that explain melt-ups when they happen. Remember the story then? Oh, the central bank buying gold. There is immense demand for silver that is going to outstrip supply. Bitcoin as a store of digital wealth and all that. But if you look at the big picture, Anna, and by my calculations, gold is now trading as though the US CPI index was already at 2030 levels. So there is still quite a bit of froth left. What that means is that gold is going to find some support around here because we are at crucial 4,000 levels. But I think that in the short term, gold is going to be tested and it's probably going to head down to 3,800 or even 3,600 levels.